Anybody pay attention the last 5 years? Asset owners win. Said differently, inflation is a feature, not a bug. Asset owners win. If you own assets, real estate, businesses, stocks, whatever, you have seen your net worth rocket higher. If you can own assets with leverage, with 30-year fixed rate debt that somebody else pays for, has tax advantages, really good stuff. Ladies and gentlemen, make some noise for Michael Zuber! Hey, 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 hey. That's my song right there. I like it. They remember. Deal Champs is legit. Real quick question. How many folks are familiar with one rental at a time? Give me a quick, I love each and every one of you. If you don't know anything about one rental at a time, let me give you some cold, hard facts. First and foremost, One Rental at a Time has written 2 bestsellers. The original One Rental at a Time, and then the second book, 15 Conversations with Real Estate Millionaires, which, oh, by the way, features Jason and Jen Pritchard in one of the chapters, so thank you all for that. We've done 21 million views on YouTube. We do somewhere between 20 and 25 videos a week. We do a live show 5 days a week called the Daily Financial News. And then finally, something I never talk about, we actually have had 10 million podcast listens. So I just want to thank each and every one of you for tuning in, watching it. It is my mission, as I've said since video number 1, is to create something that outlives my physical body by 50 years. That is my stated goal. I come to these events not to sell anything. I come to these events to change your life. So I've got 4 things today and no PowerPoint. That's my stated goal. I did PowerPoint for 20 years as a sales guy. I will never do it again. So we're going to talk about 4 things. Number 1, we're going to talk about the wealth formula. The wealth formula is 3 steps. I've interviewed hundreds and hundreds of millionaires, including Grant Cardone, Pace Morby, and many, many others. I'm going to give you the secret to getting wealthy. Number 2, I think we need to look ourselves in the mirror and remember the lessons from the pandemic. I think there are some hidden investing lessons in the pandemic. I'm going to give you 6 or 7. Lots of you tuning to the Daily Financial News, so I'm going to help you be an armchair economist. I'm going to give you the 5 economic things that I would watch for the next 3 to 6 months to protect yourself and protect your business. But let's be honest, we're at a real estate event. The first thing I have to talk about is real estate in 2025. Yes? That's why you're here, right? So, I have 3 things to say about 2025. 1 is really bad, 1 is okay, and then 1 is great. So I like to go in reverse order. We're going to start with the really, really bad. How many of you are paid on a transaction? Agent, appraiser, escrow, things of that nature. Let me know who's in the room. So again, remember, this is the really, really bad. So don't hate me yet. Let's wait for the good one. 2025, in my opinion, is going to be the cycle low for transactions. In 2024, we did 4.07 existing home sales. I unfortunately believe, and believe with every fiber of my body, we're going below that in 2025. Sorry. But here's the good news, right? Here's step 2. If you're able to protect yourself and grow, survive 2025, you are going to have a decade of growth. Because what's going to happen is transactions will get better every year for the next decade, and your competition is going to be cut in half, at least. So what I'm telling all of my friends in the industry is, buckle up, don't be confused. This is not the time to go all in on brand new marketing things. Get your business right, and then get ready for a decade of growth. Because in 2026, in 2027, it's going to feel like a Las Vegas buffet. And who doesn't like a Las Vegas buffet, right? All you can eat. So again, it will get better. Dude, it's April. You got like 9 months left. You're almost there. Now for why you're here. 2025. I have said this on some of the biggest podcasts in the last 6 months. I believe there is only one winner in the real estate market in 2025. There is only one. And it's everybody in this room. The only people that are going to win in 2025 are real estate investors. Think about that. And this is like an IQ test. I'm going to have some participation, all right? You ready? If you are a real estate investor, do you want more or less competition? What? More is the wrong answer, whoever said that. I don't know about you, but when I am out competing for deals, I want to be the only person writing the offer. Right? I want less competition. Anybody been paying attention to the stock market in the last 2 days? Right? Down like 3,000 points. You're going to have less competition. The average American in the country is not in rooms like this. They are not bettering themselves. They are not seeing the opportunity that is coming. Demand is going to crater. The American public is afraid and will likely be more afraid in the upcoming days, weeks, and months. And let me tell you this, the consumer will not sign a contract to buy a home when they are scared. So that's step one, less demand. Let me ask you this question, again, this IQ test. Do you want more or less supply as a real estate investor? You want more supply. Ideally, more motivated supply, motivated sellers. So if demand is falling and life still happens, death, divorce, job transfers, all of that, we are going to see inventory build. In fact, if you don't know, inventory is already up 33% year on year, and it's going higher. More importantly, days on market. Days on market have gone from a low of 27 to currently 43 and going to 60. Again, this is investor-friendly stuff. Less competition, more supply, longer days on market. You got me? And then the last thing, as real estate investors, do you want higher or lower rates? Guess what's happening today? So again, 2025 is the real estate investor year. This is the year we get a buy box, we write disrespectful offers, we follow up, we follow up, we follow up. 2025 is going to be the year some of you do your best deals of the decade. It will be the year some of you do seller finance deals. It will be some of you do your first novation, your sub 2, whatever it is. There are people that are going to have to sell, and you are the only person that's going to help them. Be excited for 2025, because what will eventually happen in 26, in 27, in 28 is the economy will right itself. Rates will be low, and the home buyers will return. 2025 is the year of the investor. The only person that wins in 2025 is a real estate investor. It's time to skill up. It's time to have a buy box. It's time for daily discipline. It's time to focus. Get fucking after it. All right, so that's step one. Now let's give you the wealth formula. The wealth formula is remarkably simple. It's been around for hundreds of years. It is only 3 steps. Step number 1, you have to create disposable income. I don't care if you make 50 grand a year, 500 grand a year, or 5 million a year. If you do not have disposable income, you're not getting wealthy. I know people that make seven figures a year and they couldn't write a 5K check. They're broke. Income doesn't matter. Top line income doesn't matter. Net income doesn't matter. Take your net income minus your life, and whatever that bottom number is, that you could literally light on fire, that's disposable income. So your job, step 1, is A, know what your disposable income is. If you don't know what that is right now, shame on you. Literally, shame on you. You need to figure that out. That would be an action item I would take this morning. Honey, we're gonna go figure out what our disposable income is. And let's be honest, for some of you, it's negative. You're living on credit cards. For some of you, it's 0. I was there. As a 30-year-old man, I was there, so I know what that feels like. And then for some of you, it's a positive number. Again, you need that, you need to understand it. So, how can you increase disposable income? Great news! There's only 3 ways. You can whack expenses. Do you need 7 streaming services? Probably not. You can increase revenue, top line, or do both. That's it. I suggest do both. In reality, it's easiest to cut expenses. That's an immediate fix. But the way to move the needle is increase revenue. So again, do both. Step 2 of the wealth formula. And again, every millionaire, every decamillionaire, and the few people I've talked to that are worth over $100 million do the same thing. They become elite at one thing. None of this 7 streams of income, this diversification nonsense. You don't have time, dude. We are all busy human beings. We have jobs, we have family, we have our health, we have our church, we have all this other stuff. This getting wealthy shit takes time. So become elite at something. Now, in my world, that means you have a buy box. My buy box back in 2002 was 93703. Shout out anybody in the Mayfair. 3 or 4 bedroom houses, 2 baths, 2-car garage, 1 story, between 12 and 2,000 square feet, 1,200 and 2,000 square feet. I knew that buy box better than anybody else on the planet. And when something came in that was a great deal, we bought it. I don't care if you want to become elite at classic cars or Pokemon cards or wine or comics, whatever. Pick your thing and get focused. Don't be distracted. Don't be that person that says, I'm going to learn crypto. I'm going to learn options. I'm going to learn, something else. You have a life. You have very scarce time. Time is our limiting factor. So pick your thing. That's step 2. And step 3, you guys hate me when I tell you this, but it's true. You got to do it for a decade. This get rich quick nonsense, this be rich next 90 days nonsense, that's not how you build legacy wealth. You've got to be committed to this process for a decade. But let me tell you, as somebody who has finished that race, it's amazing and it's worth it. So again, that is the wealth formula. You can argue with it, you can poke at it, doesn't matter. Everybody I've ever spoken with has agreed, including Brandon Turner, Pace Morby, Grant Cardone. It's the formula. Let's talk about the pandemic. I think there was some financial lessons that we should all learn from the pandemic. And again, if you don't learn the lessons, you will repeat them. And I used to have a rule when I ran sales teams. I don't mind mistakes, but you can never repeat them. Because it's a repeated mistake that burns. Because you already paid the price once, so don't do it again. That is when things became unacceptable. So let me give you my list of lessons that I have seen myself learn or people in my network learn. Here's number 1, and it's a big part of one rental at a time. And again, you could throw rocks at it, you could hate it, it doesn't matter, it's true. Asset owners win. Anybody pay attention the last 5 years? Asset owners win. Said differently, inflation is a feature, not a bug. Asset owners win. If you own assets, real estate, businesses, stocks, whatever, you have seen your net worth rocket higher. If you can own assets with leverage, with 30-year fixed rate debt that somebody else pays for, has tax advantages, really good stuff, AKA real estate. Right? So again, the economy has done the same things for decades, if not hundreds of years. We are in a soft patch right now that, again, could get bad. This is the time, as you will see, to get rich, to find the motivated sellers, to do those things. So we'll talk more about that in a minute. The opportunity in 2025, as I said in the opening, is for investors. So again, I don't say pay list price. Never pay list price. Get credits, get buy downs, get seller financing. This is the time to strike life-changing, legacy wealth-building opportunities. Here's one that's always bugged me. Bigger is not always better. Who in the room has heard Grant Cardone say, if you don't buy 32 units, you're a loser? All of us, right? Well, guess what? As I have said for a long time, there are plenty of people who are limited partners in big syndications that have already lost all of their money. Bigger is not always better. You know what's better? Better is better. So in my world, you calculate the return, AKA yield, return on capital, cash on cash, whatever you want to call this fancy metric, What produces the best return? And as always, I give you real examples. In our portfolio, we have something as small as a 1-bedroom, 1-bath, 512 square foot house. The biggest thing we happen to own is a 20-unit apartment building. I put both of those assets in the same exact spreadsheet to tell me which one produces the better return. And for the last couple of years, houses have been better. Back in 2011-12, apartments. Again, better is better. This whole marketing shtick about bigger is better is some GP trying to take your money and say, trust me, bro. It's not going to work out for lots of people. Do your own work. Make your own decisions. Know what you're doing. Better is better. And I believe better is return on capital, cash on cash, AKA yield. Ooh, here's one. Shiny objects can kill you. There have been lots of people that I interacted with that jumped into different forms of real estate investing, like short-term rentals in Palm Springs or other cities who have since turned against short-term rentals. We are seeing lots of pain in different parts of the market. Again, you will see many times over the next couple of decades, some part of the real estate game will pop off. And again, there will be plenty of people that kill it in that space. But please know thyself. Olivia and I were both intrigued by short-term rentals in 2021, 2022. But our systems, our process, our deals, frankly, the properties we own weren't great fits. And frankly, we didn't want to learn something else. We had something that worked. And believe me, a lot of the short-term rental guys at events like this would make fun of me. You know what they called me 2 years ago? Boomer. I am not a boomer. I'm old, but I ain't that old. So again, know thyself. Don't feel like you have to chase something else. There are plenty of people that are all over the place that will be perhaps mortally wounded because they were chasing shiny objects. Again, if you're in this game, if you are an employee, you're running a business, it's 10 years, remember? Don't try to shortcut it. It just takes 10 years. Here's another one, and I think we're going to see more and more people wearing orange, if you know what I mean. Easy money brings out both the pretenders and the frauds. We are already seeing some people that were gurus in this space go to jail. Others are under investigation. Do your own work. Don't chase. Understand what you're getting involved in. Just because somebody's got a big name doesn't mean anything. Do your own due diligence. Do your own work. Does it make sense to you? Is it your plan? And again, you will see this before. We have been buying real estate since the early 2000s. What we are experiencing right now is the same nonsense from 06, 07, and 08. It just is with a different name. So again, if you're in this game for a decade, you will likely see this again. So again, don't repeat mistakes. That is where things get expensive. I got two more here, and then we'll get into the armchair economist. This one is a big deal for me. No one is coming to save you. No one is coming to save you. It's on you. It's on your family. You need to make the choices. You need to do the work. You need to live with the consequences. This is on you. No one is coming to save you. That should both be maybe a little frightening, but also empowering. I don't know about you, but I would much rather control my own destiny than have some other entity say, hey, we like you, you're going to win. We don't like you, you're going to lose. No one is coming to save you. You're in rooms like this because you believe that. You're investing in yourself because you believe that. So kudos to you. Here's one more, and I got this from Coach Carson. I love to give credit where credit is due. Coach Carson, at our event in Vegas 2 years ago now, talked about what is enough. In the social media world, and I am just as guilty as some of you in the room, we have comparison syndrome. Who in the room would not want to be Pace and Laura Morby? Just balling, enjoying life, arguably worth $100 million, right? That's a lifestyle that lots of us look at, myself included, and go, oh, I could do that. I could be like that. We could be like that. And then I step back and go, damn, that guy's like in 9 states in 7 days. Like, do I want to get on an airplane that much? No. Right? So again, don't suffer fools. Know thyself. Know what enough is. One of the things I highly recommend you do is get with your significant other, if you have one, and really internalize, what does my life cost? What is our ideal life cost? In fact, I will give you a piece of homework that others have paid me money for. If you really want to have a fun conversation with the family, if you have kids, say kids over 10, include them in the following. I suggest you sit down and you design 3 lives. Let's design the base life. What are we living today? And I'm going to put some numbers on this just so there's some context. Let's say your life today costs $8,000. And if you had $8,000 coming in from passive incomes or business or whatever, you would be happy as a clam. That's step 1. Step 2, again, with the family, have a discussion about what's the minimum. Like, what is the bare minimum we need? Because then you start thinking about what you could cut out, what would be uncomfortable, but you're not going to have a life that's worth $8,000. Maybe it's $5,500. And now for the fun one. Design just the most spectacular life you can imagine. I've done this with hundreds, if not thousands of people, and I have seen people come up with 20, 25, 30, 40,000 months, right? $40,000 months just to have their life. Work with the family. So design those 3 lives. Get input. Where do you want the second home? Do you want to fly first? Do you want to fly private? Right? What do you want this spectacular life to be like? Because once you do that as a family, you have a North Star. You know what the minimum is, you know what the base is, and then you can always shoot for the stars, the balls to the wall life. Again, take that action item. It's free. Have fun. It is a great experience getting the family involved. Who's going to do that over the next couple of days? Not enough of you. All right. So I'm going to help you be an armchair economist. We are going through some stuff, this tariffs, this trade war. China retaliated this morning with 34%. Lots of negotiations going on. Get your head out of the headlines. You can watch my daily financial news. I will summarize it in a very neutral state. It takes 12 to 15 minutes. Do not get distracted by all the nonsense. All of you have a family. All of you have businesses. All of you have investments. Do your thing. Stay out of the mass media. If you want to know what's going on in the economy, here are the 5 most important economic metrics for the next 6 months. You ready? All right, here we go. Number 1, this is a big one, retail sales. If you don't know, an economy like the United States is built on 3 legs. There's government spending, which, oh, by the way, is the smallest leg. Does anybody think government spending is going up over the next 3 to 6 months? No. Doge is whacking that stuff left and right. Government spending is going down. I would argue the only reason we didn't have a recession the last 2 years is because government spending got out of hand. Government spending should be about 8% of GDP. It went up to 12. That is not sustainable. So government spending over the short term, being the next 1 or 2 years, is going down. Number 2, the second leg of the stool, and the second biggest, or second smallest, because there's only 3, is private enterprise, aka small, medium, and big businesses. Guess what is going on right now in small, medium, and big businesses? They are frozen. No CEO out there is making any investment decisions, any hiring decisions. It is going down, again, at least in the short term, the next 3 to 6 months. And now the largest by a factor of the U.S. economy, is all of us, consumers. Now, we are very likely to see an artificial bump in Q1 because a lot of consumers bought ahead. I'm actually curious. This is a pretty big room. Anybody buy a car in the last week? Yeah, a couple of us. Again, you probably did that, because you see tariffs coming and you wanted to buy ahead. So we may have an artificial bump in Q1 because people made rational decisions to go buy a Mercedes or a Ferrari or a Toyota or whatever before the tariffs. That's a rational decision. But now that we're in Q2, every consumer I talk to is sitting on their wallets. So again, I think we're going to see very quickly government spending down, private enterprise down, and unfortunately consumers down, which could lead to a recession, which will likely lead to a recession. So the number one thing you should be watching for is retail sales. It's published once a month, usually during the third week. And here's the deal. The number doesn't matter to you. All you want to know, is it positive or negative? As an armchair economist, all you want to know, retail sales positive or negative. That's number one. Number two, this one comes out every Thursday at 5:30 a.m. Pacific. One of the things that you hear from the doomers and the people that say we're heading into the Great Depression or Depression 2.0 is the job market is weakening. Guess what? Every 7 days, Thursday at 5:30, we get something called the weekly unemployment report. This week, the weekly unemployment report came out yesterday. It was 219,000, down 6,000 from the week before. These are the numbers that I would track if I was an armchair economist. I would put a green flag next to anything below 250. As long as we stay below 250,000, no concerns. Yellow flag, 250,000 to 300. Red flag, anything over 300. If we start seeing weekly unemployment claims go up to 312, 325, danger, danger, danger. All right, you got me so far? Okay, all right, just making sure. Next, again, everybody in this room is interested in real estate. So one of the things that I would look at weekly, it could be Monday, it could be Friday, just whatever day of the week you want to look at, is the 10-year note. The 10-year note, the last time I checked, which is about 25 minutes ago, is down under 4%. I think it was 3.94. The 10-year note is very important for lots of things. For real estate people, it's because it's what the base is for mortgages. Right? Historically speaking, if you watch the daily financial news, you know for 40 years, the additional bump off the 10-year note was 180 basis points or 1.8. In the pandemic, it went as high as 3.06. Today, it sits at about 2.6. As we get more certain that gap will close, we will eventually get back to 180. But again, if I was interested in real estate, I want to know what the 10-year note is doing. It is good enough for you all to watch once a week. So put it on your calendar, just check it, and think lower is better. All right, got two more. Number 4. The Federal Reserve is supposed to fight inflation, stable prices they call it, and keep the job market healthy. The Fed has told us very clearly what is the most important inflation reading. Again, if you want to geek out, there's CPI, there's PPI, there's headline, there's core, there's month-on-month and year-on-year. Don't worry about that stuff. I'll do it for you. The one that you should watch is the one that the Fed says is most important. And they have told us for years that the most important reading is PCE, Personal Consumption Expenditures, core. That comes out at the end of the month. And again, all you're looking for is it to go up or down from the month before. Currently at 2.8. Unfortunately, it was 2.6 last month, so if you're not paying attention, that's the wrong way. We want that number going down. And the fifth and final thing to watch, and again, as real estate people, is active inventory below the median. I believe the housing market is broken. I believe we are seeing inventory stack up above the median. So if you are a real estate investor, you are likely shopping below the median. So I don't care what the total active inventory is. I want to track active inventory below the median price for my market. Is it going up? Is it going down? Folks, I nailed it. That was 30 minutes. Thank you very much.